Thank you, Angel, and hello, everyone. Welcome aboard. Nice to have your company on this Monday, the 25th of October in the year 2021. Goodness me, that means there's only 2 months and 1 week left in 2021. Who'd have thought it? Well, those who watch the calendar, I suppose. Let's start where we start the week, just about each and every, and is with pound US dollar to see if we're going to trade the breakout of London Open. We're still in 2 of the breakout trades from last week, and this is one. This was the last of them, which we traded on Wednesday, perhaps. I think it might have been. Can't quite remember. Showing us a little bit of downside at the moment, but I'm going to leave this. But I'm only going to leave it for a little while. And the reason is we're now getting a fairly obvious sequence of lower lows and lower highs. Moreover, we're at the top of this range, which of course is a descending channel. And it looks like we're going to come off the top of that range and head back down towards the bottom. This may well be the turning point. Didn't quite make the confluence area, but it may well be close enough to rely on. So I'll probably be looking for shorts here if I was to be trading the pound versus the US dollar outside of the breakout trade. But I do see an opportunity. Sorry guys, I just turned my phone off. I do see an opportunity for us to trade the breakout to the short side. So we will place an order on pound US dollar for the breakout. We've got about 3 minutes to do that before London opens. And I'll just go back and reassess the current trade that we're in, or the most recent trade that we are in. If we get a 4-hour close below here, I would likely close the order. I'll give it a chance to get up to that trade line probably, which gets us back into profit. And at that point, I think I'd probably move my stops to entry. We shall see. But for the current or today's order, let us find the range first up. On the hourly chart, we're looking at the previous 24 hours. So here's the high of that previous 24 hours, as well as the current 24 hours. So the high is obviously back on Friday. The low is kind of in the crossover, isn't it? It's today's candle, so we use that as the low. Now, for those of you here for the first time, I do see a couple of people in the room who I haven't seen in the room before. So good day to all of you who are here. Ram, hi, how are you? Hi, Raj, SF, Sui, and everyone else. People who may be in YouTube as well. I'll just update my YouTube to see if I can see anybody in there. So for those of you who haven't seen this done before, this is a test mode. We are not suggesting that this is a winning system by any stretch of the imagination, but we are testing it. We're testing it live just to see if we can get to a point where we can make this a better than even chance of winning money. That, of course, is the whole idea. So we choose the high of the previous day, which was Friday, which is there, and we go long above that by 5 pips, and we choose the low of whichever the previous day, including price so far today. If there was a higher high here, we would choose that higher rather than Friday's high. But as it turns out, today is the low and Friday is the high. So we will place an order long, as I said, 5 pips above the high of those two, what equates to about 30 odd hours, I suppose, and the low. We'll place the stop loss 3 pips below the low. We will also place an alternate order short in exactly the opposite parameters. So 3 pips below will go short, 5 pips above would be our stop loss. Either one triggers, we cancel the other. It's as simple as that. Hi SF, how you doing? So here are the levels as we now get the new candle. The high is going to be that bar there. So 138.32.4. So we would round that up to 138.33 and add 5 pips. So it becomes 1.3838. So I will place that order. Now, this is a very, very small amount of money I'm putting at risk here, very small. And if you are going to trade this, I suggest you do exactly the same. So it's a pending order. It's a buy stop at 138.38. And the stop loss will be 3 pips below the lowest point. And that just happens to be 1.3735, which will become 1.3732. 1.3732. So I've actually got 106 pips of risk on the board there. I'll look at it. Okay. So there's our entry long, and our entry short is here, exactly where we want it. Now, there are a lot of lines on here, understand that. Hi, Graham. Yeah, look, all going well. Thank you. Thanks for saying hi. So we just place another order, this time short, and we do exactly the same thing. So sell stop at 1.373, forget the number, 32, I think it was, and stop loss 1.3838. Now, I must say I don't like the long, and the reason I don't like the long is that we don't have room for our TP1 before we hit resistance. So with our TP1, we actually don't take profit, but what we do is move our stop to entry, and that is at 1-to-1. So in other words, we're risking, what did I say, 105 pips or 103 pips or whatever it was. If we're risking that much, which is there to there, so 105 pips by the look of it, we need inside 105 pips to have our preferred rather take profit one. It's just not there. So what I would do in that instance, if it does go long, I would keep the stop very, very tight. Hi, John. I would keep the stop very, very tight on that. So I'm really adding management to this breakout scenario that we've been trying to get right for the longest time and haven't yet. So I'm going to add my own management style to whatever we do here in terms of the breakouts and see if we can improve the win-loss ratio, which I've got to say has been going quite well in the recent past. And for the low side, this is why I want to take the trade. For the low side, you can see why I want to take the trade, because if we do break low, potentially we're headed down to here. So we could get a very big run out of this. So we've got tons of room for TP 105. I can't even see anything. Maybe that level there's a bit of a worry, but we've got 105 down to this low, which is probably the best level that I can find on the chart. So happy to take it short, not happy to take it long, and I will micromanage it if that is the case, if we do break long. Okay, so hopefully for those of you here for the first time, you now understand exactly what we are doing there and the system that we are trying to create here to make us money each and every day. That's probably not going to happen, but if we can get it 2 days out of 3 or 3 days out of 4, then I'd be more than happy with that. Okay, so that's pound US dollar. As I said, if I was trading this today, I'd be looking to trade it short, but I would be looking to trade it off something that makes sense. And that to me would be either a false break of resistance, which could well come from this area here. So price up to here, maybe even breaks it a bit, consolidates, gets back underneath it, retests it, then I would look to go short. There probably are a few other permutations of that but I won't dwell on them because I'm not that keen, to be honest. Okay, we had channel on the 4 hour. Inside my channel, we got a channel in the channel, have we? Yeah, it looks pretty decent, I'd have to say. Let's whack it in. Probably in there, pretty tight in there. Big false break, perhaps. So, yeah, it could still go long. I get where you're coming from, because we didn't quite reach the top of that, did we? As I said before, we didn't quite reach the confluence area up here. So maybe there's another push. Maybe there is. I just feel that we've probably seen as high as we're going to go. Who knows? I'll trade it if I see it. It's as simple as that. But yes, Gary, agree with you. There is a little channel sitting there and potentially a bull flag off high, 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 low, high, high, potential higher low, break out to the high side, long. I can see it, totally see it. That's why I wait for a setup, because I'm not convinced yet that we're going short, but my bias is definitely in that direction. We shall see. Right, a few things. I'll just go. There were 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 weekly game changer bars. Those of you who've got no idea what I'm talking about, it's a weekly thing that we do each and every Monday, and we're looking for what in the technical analyst industry known as key reversal bars. And if we go to the weekly chart, I don't really want Aussie Yen's a perfect one, actually. Aussie Yen, and I will do a little bit more on Aussie Yen because I think this has got real prospects to go to the downside. We are at a strong resistance level. This is a weekly chart, don't forget. We've tried already last week to crack through that high and failed, put in a reversal bar. Now, that doesn't mean that we just trade the reversal bar per se, unless we have a system that suggests we can do that. Now, that system includes, if you like, the game changer bar, of which this is one, but there has to be more. I can't just jump in on that. The second prospect here, or the second reason that I would consider doing that, is that we're at a strong resistance level. The third reason has to come with what I call the dominant feature of the chart. And that can be a trend, it can be a chart. So if I've got, actually I'll go to the analysis chart, it's a whole lot easier. If I've got reason to believe that the dominant direction, if you like, which is guided by the chart pattern, is down, then I would choose to trade it, because I've got ample reason then so to do. I've got a big double top sitting here. That kind of works. I've got a big, yeah, it's skew-if, but it's there. Big inverted head and shoulders over here. And I think that is the dominant force that's driving this market. Therefore, I would be prepared to listen to what the candles are telling me. And the candle is telling me that this is rejecting the level, which is not just a horizontal level. It's also the top of our range here, which was triggered by this inverted head and shoulders, suggesting that the market went long, and it did, to the resistance level, came back off it. Now we're there again. So with the addition of this trend line in here, you can see that there is a fairly decent confluence here. So I'm more than willing to go short. Look, will it go down to the bottom before it hits the top? Maybe not. And that's why we have to manage the trades, of course. So I am willing to go short here. Whether I'm willing to trade the weekly bar, I haven't yet decided. But I'll probably do that while Ash is having his go in just a tick. Preference would definitely be to see a lower high in here after, this is on the daily chart, after we have come off the top of that channel. And I would look to trade that lower high if we see it on the daily chart. The third option is on the 4-hour chart as a false break. Now you can see that we're almost closing in on a false break of the support trade line. That makes it a little bit more confusing. But I love the fact that we've got a confluence of resistance trend line and support trend line here. And I think we'll get a very strong indication as to which way this one's going to go when it does break that or bounce off it either way. If it breaks it and proves to be false break, that would be the absolute best case scenario I can think of. So break here, consolidate, get back underneath there, take the pivots with it, retest all of that confluence and go short. That would be my preference on Aussie Yen, and I'll be looking very, very closely at it. Ash, how you doing, bud?
Yeah, very good, mate. Very good. FTSE's actually shaping up for a trade, mate. So I'll grab the screen really quickly, and then we'll catch up about the weekend and see what we like for the week. There we go. Let me give you this. We're showing this. So FTSE, I'd like it to touch down here. Now, it's pretty hot. I mean, the FTSE has been hot for quite a few days, even when it looked like there was some major rejection up here last Friday. It's just jettisoned back to the upside again. So I think it's going higher. Now, I'd like it down here, but it might not touch. You can see that there is this level here, which may end up holding. Now, I would consider that level at the top of the hour, but not before. So I'm either going to get in here on a bounce on a limit, effectively what is a limit order at 71.95. It'll be on the sell. So mine will be about 71.96. Sorry, 71.97. I don't mind taking that on the limit order. But if it's not to get there before the top of the hour, I'm probably going to leave it, and I may well miss the trade to the upside. It's looking pretty keen today. So the question is whether there's enough momentum to get through here. Now, when we're looking at this, or when I'm looking at this, I see here is the all-time, or not the all-time high, the current kind of cycle high, and it's around about 72.20. And I think it could get to that point before it hits resistance again. I think we're probably going to stay in the range, mate. I don't think we're going anywhere. We got some quite big earnings this week. We got Microsoft out this week, and Twitter, I think, also out this week. So that might just cap some of the moves. But what's been really interesting is that when you look at the market and we look at the Nasdaq in particular, the Nasdaq has been really struggling. In comparison to the others, the Nasdaq it's just started to come off a little bit. Now, let me just change this to a clean chart here, and we'll have a look across the around the grounds here. But you look at the Nasdaq on the dailies, nowhere near its all-time high. When you compare that to the S&P, very different picture. The S&P's made a fresh high on Friday, but the Nasdaq's not picking up the same momentum. And I think this is quite interesting, because what this is really saying is that the investors are moving into a slightly different approach. Where we saw the Nasdaq take off hard when the rally started, when the recovery started, the S&P and particularly the FTSE actually and the Russell 2000 were lagging behind. But now it's the Nasdaq that's lagging behind. Even if you compare this to the Dow Jones Industrials, same thing, Dow Jones Industrials making fresh highs. So what this is saying to us is that the growth stocks, and a growth stock is something that grows in its price, but it doesn't really pay a yield, are not as popular as the value stock. So people are moving away from growth and they're going towards value. And if you think about the business cycle, this is really the next step in the maturity. And if you know that that's going on, and you think that is going on, I mean, you may have people may have a completely different opinion to me, but if you think that is going on, this is where the really interesting hedge trade comes in, and we'll talk about the hedge trade in another environment in a moment. But the hedge trade effectively says that the Nasdaq won't perform as well in an uptrend as, let's say, the Dow or the S&P, and we've seen that. So the evidence is there. And going forward, we're going to say the same thing. We don't believe the Nasdaq will perform as well as the S&P and the Dow. So if we were to buy the Dow at 35,541, let's say, then if we were using no leverage, let's say we put $1 per pip on the Dow, that's going to cost us 35.5 grand. Now, if we come into the Nasdaq, so we're going to buy the Dow at $1, but we would sell the Nasdaq. Now the Nasdaq's at 15,375, 371, so it's around about half. Let's just say it's half, just for to make things easy. So we would sell the Nasdaq at $2. So what we're saying is that for every $2 of movement in the Nasdaq, the Dow will outperform it by 3 or 4 or 5, let's say. Now, if this is to come down, it's also saying that the Dow won't come down anywhere near as much as the Nasdaq. So this is what a hedge trade is. You sell one against the other. So you effectively create your own pair. So we trade currencies in pairs. We're trading the Aussie versus the dollar and all this sort of thing. But here we'd be creating our own indice pair. So we buy Dow, sell Nasdaq, or we buy the S&P, sell Nasdaq. Or one of my favored ones would be buy FTSE, sell Nasdaq, because the FTSE also offers a lot of value stocks. Where the Nasdaq, as I say, is growth. So if that growth, if the market is effectively saying the growth is near the end of its cycle, what they want to then do is go and put their money into something that is definitely going to give them a dividend return. So which is why they'll switch over to the value. So you can do that with the Nasdaq, and it's a really good one to do that. DAX is another one. You might want to use the DAX against the Nasdaq, but the Nasdaq is the obvious sell. But you'd have to make sure you hedge out the risk of the upside of the Nasdaq by buying something else. So that's quite a nice trade. The other one, when you look at that, is gold and silver. So same thing with gold and silver. Now, the only problem I think with gold and silver, or where it differs from the Nasdaq trade, is that I think if the market comes down, the Nasdaq probably will still suffer more than the Dow. Thanks, Angel. I'll come and have a look at that in a moment. Sorry, shouldn't have done that. The Nasdaq's more likely to come down. So if the market tanks, the Nasdaq will probably come down more than the Dow. The problem with gold and silver is that if the market goes up with gold and silver, yes, silver's more likely to outperform, but conversely, if they come down, silver's likely to actually come down harder. And the reason really for that is that silver is currently at 24 about 24.50 per ounce, where gold is at 1,800 per ounce. So there's a huge disparity there between the two metals. And for silver to drop from 24 to 22, not very far, but that's a 10% drop. Gold to drop down from 1,800 down to what would be 1620, that's the 10% drop. So actually silver wouldn't have as much to go. So yes, it's another hedge trade, but you can only probably do that if you think that the market is going up, and you're adding a little bit of protection by bringing the gold sell into it, but maybe not as attractive, but when you look at it, mate, we've got now I don't know whether I've got the pen on this screen, so let me just write this out with
actually, look at that gold chart.
Yeah, definitely, it's looking really good. So gold's at 18 currently. Gold's at 18. Now we'd want to divide that by 24.50. And that is going to give us the price of $1,800 divided by 24.50 equals 73. Now this is the gold and silver ratio. So you guys should look into this. And this gold and silver ratio would point you towards which one you should buy out the two. If you like precious metals, then it would tell you which one is the better one to buy. There tends to be a range of around about between 75 and above would say to you buy silver over gold. because the rate, because silver's becoming way too cheap in comparison to gold. If it starts to go 35 in the other way, then it says buy gold over silver. So you kind of you again trading them as a currency pair. If you owned gold, if you had gold in your portfolio, the suggestion here would be sell some of your gold and buy silver. Don't sell some of your gold for cash, but go sell some of your gold for silver, because the silver product and commodity is likely to outperform gold over the course of the next few weeks or next few months, until that gets a little bit closer to 65% is pretty comfortable. You know, that's sort of like when it gets in that 65% range, that gets a lot more comfortable. So you can see that it's slightly outside that, you know, and it'd be almost like a Bollinger Band. You know, and you'd see sort of like with those Bollinger Bands, where does it sit? And silver's currently sitting between the extreme and the comfortable, if you like, for want of a better word, the norm, if you like. So from the medium to the extreme, it's sort of sitting in between. It's not in the extreme quite, but it's sitting in between. So it does suggest that actually silver is probably a better trade right now than gold. So if we then bring the silver chart on, what we see here is silver having broken through a level. You know, this is the if we look back for when this looks like it was back in 21. So it looks like a July in 2021. Now June, July sort of time. So it's somewhere around about here. If we do the same with gold, this is probably a similar sort of time. And it hasn't broken through. Okay, so it's above the price action today, but look where we are today. We're effective. Sorry, look where we finished on Friday, just below the level. So they actually look like different charts now. Silver's taken it out, and gold is still slightly underneath. So that would suggest to me that silver, somewhere back here, would be a trade. When you look at the weekly chart, where I think silver becomes really interesting and would become hyper attractive is if it does this. If we get our old friend the inverted head and shoulders down here, so silver was effectively bobbling from this point here, it creates resistance there, and then it just starts to kind of like just dip into this area. That would be really good, because that would be a test of this zone here. It would be right along the horizontal level here, but it's coming back to test it on an inverted head and shoulders on an accumulation pattern. Now that particular price is at around about 22.80 to 23, somewhere around about there. So I like silver, mate, but we would probably play it in different ways. You know, where you would play the where the stop losses were hit. I'd probably try and play the limit, which means that I'm more likely to get a better price, but less likely to get in if it goes. So so it's, you know, it's balance, isn't it? Everything's about balance. You know, do you sort of choose to get in?
It's always there, isn't it? It's risk to reward.
Yeah, exactly. And you know, I accept it, and the reason I accept it is because I prefer to get. It really bugs me when I get the wrong price. So I prefer to not be on board something than get a bad price and be on board it, you know, because I tend to make mistakes. You know, it's a funny thing. If I get the wrong price, but the market still goes in my favor, I tend to make mistakes because I don't feel like I've got the low. I'm much more likely to sell as it goes up rather than letting something run and being able to put stops at break even. It feels like it's going to come back at me. So so that's where my psychology sort of sits, which is why if I can get what I believe to be a low point, I'm much happier. Particularly if it bounces from there, because then I feel like I've got some room to just to leave things alone. So that's what I'll be looking at. I wouldn't be interested here personally, but and with gold, I feel quite frustrated about gold because I feel like I did get in at a low, but it wasn't quite as low as I wanted, and I did close a position. So I think gold. I was in around about the 1770 level, and it was pretty good, but I didn't feel like it was good enough, so I ended up closing when it started to rally. Maybe there's another opportunity. Difficult to know, but it might well be missed now. I don't know.
Look, I think that looks like a sell to me at the moment.
It does today, doesn't it? Yeah. Yeah, the market's looking, as I say, the FTSE looks pretty hot, and you know, this is a really good example. I could have got in here on the FTSE, but it didn't. It wasn't quite as low as I'd like, but it does look hot, and it does look like it's going. But I prefer to wait and see if I can get my price. I don't mind this price, as I said before, if we are here at the top of the hour. No problem with that at all. And it looks like we might get that. Looking at this 15, it looks like it might mess around here for a little while. But there's this trend line down here, which is probably there actually. Oh, sorry, it is there because it's on the. I'm looking on this chart. Trend line about there, and there's also the pivots here as well. Let's bring those back in again. So you're going to ask me about trade of the week, and and if I'm honest, mate, I looked at the fundamental data, and I looked at the COT data, and I looked at the seasonality this week, and it looks ugly. It looks really ugly.
Interesting.
Yeah, it looks all over the place. You know, it's the dollar looks like it's incredibly weak on the COT. So if you were to say, right, what's the COT data telling you? The COT data says a dollar yen short. That's what the COT data says. It's the weakest currency versus the strongest is the dollar yen short. Now, I don't know how you can justify trading the yen with a global economy, you know, the global economy so bullish, you know, people so bullish on the global economy. But that's what the COT data says. The COT data says, well, actually, when you look at this, it looks a bit more attractive, doesn't it? So I like that.
It is a game changer bar. Yeah, it's a game changer bar, but gee whiz, tough to trade it.
Tough to trade it. I would have to plump for this though, because it's the closest thing I've got to any kind of marriage from one to another. Because then if you go to seasonality, yen is very weak. You know, throughout November, the yen is really, really weak, and the dollar tends to rally around about the middle of November. So that doesn't help. I wouldn't put seasonality at the top. The seasonality would be third for me. So I'd go fundamentals, then I go COT, then I go seasonality. Now, if you look at the fundamentals, they're all pretty flat. You know, there's nothing that is really poking its head up. The only one that, in fact, there's two that look of interest. Swissy looks interesting for a long, and the yen and the Kiwi looks interesting for a short. Now, although that's going to go against the grain for a lot of people because of the Kiwi the interest rate rise, but the truth is the fundamentals are a little, and this is the thing, a little bit weaker on the Kiwi and a little bit stronger on the Swissy. So it's tight. You know, margins are tight, which doesn't fill me with too much. If you look at, and the COT data is the only one that has any kind of extreme where you go, okay, the yen is an out and out. Is it an even out and out buy? It's not quite an out and out buy, but it is a buy. But the dollar's an out and out short. So that's the one sort of area where you could see, okay, that's the strongest versus the weakest. The yen's at around about 80 on the index, which is not near 100, but it's still in the bullish area, but the lower end of the bullish area. The dollar's around about 4. So that is embedded nicely into negative territory. So that's the only thing I've got to go on. So because of that, I'm going to say a dollar yen short, but I won't be trading it. So
yeah, fair enough too.
Yeah,
look, I think if you've got reason to other than what you just mentioned, like a technical reason, then maybe you've got the beginning of a technical reason, but you've only got the beginning. It's not there yet.
No, I think that's fair, mate. I actually, because this bar does look interesting, but you're right. It doesn't say a lot. It says be careful up here. What we got? We have got a little head and shoulders pattern forming here, and I suppose if this was to play out, then that would suggest there is some distribution going on up here. But then if the dollar's to weaken, I just don't know whether I'd want to trade it against the yen. That's some of the issue as well that I've got.
It's tough call, isn't it? The yen has been so weak for a long time.
That looks okay though. I don't know where that would be. I'm not sure if that would be there. Yeah, it probably would be about there, wouldn't it? So that would move this up a little bit, probably to around about. Oops, that would move this up to around about here. I suppose this is the area that I'd be a little bit more comfortable if the dollar yen was to rally. If the dollar yen manages to get back up to this point here and test, then and then form some sort of reversal signal, then I wouldn't mind it so much. And that area is 114. Call it. Well, let's see if we can get a nice round number here. That high there, yeah, probably about 114. I'll be okay with that. Sort of calling it around there at that. If it creates reversal between 114 and 114.20, 114.30, creates reversal up there, then okay, fine. Dollar yen short. But here, no way. So probably won't be a trade of the week. It might be because it's 113.67 right now. So a bit of a rally first, and then drop down. Looks like towards the end of the week we might get that, but it's a difficult one, mate, for me.
It's not dissimilar. In fact, the chart looks very similar to Aussie Yen, and that is my trade of the week.
Oh well, we'll have a look at that. Let's have a look at that.
But it's got to set up.
Yeah, well, this is the thing. Today, very, very light on news and data, suggesting that we'll probably be stuck in a bit of a range. Not much tomorrow either. A little bit from Japan tomorrow, so I'm not sure if that could help out something in the way of the trade. CPIs from Australia on Wednesday, and we got a Bank of Canada rate statement on Wednesday as well. So it looks like the CAD could be maybe the most volatile and create some intraday opportunities, possibly up until then. ECB press conference on Thursday. Unemployment claims from the States could be of interest, and then on Friday we get some PCE. But looks like a pretty light week for data. Doesn't look particularly busting. Definitely going to get some movement in the stock market because we got earnings. We're still in earnings season, and the stocks look like the place to go if you want some volatility. And it looks like the CAD. Just looking at that, but nothing that would suggest that we would be putting the ball back in the Fed's court to say what they're about to do, what they're going to do next. This transitory language still seems to float around everywhere. They still seem quite keen to suggest that that inflation is not too much of a concern, and it's just whether the market trusts them, really.
Well, it was interesting on Thursday and Friday. The market seemed to change sentiment from risk on to risk off. And I'm just waiting to see how that pans out today, if there is follow through on that. And that's why Aussie Yen is so important to me at the moment, because it's at that crucial level. It is at an inflection point, and it will tell me today, I believe, whether it's going to go long or short. My bias is definitely short, and I think that's the trade of the week if it does set up, but it's got to set up.
Yeah. Okay. Have we had a look at the Aussie Yen?
We've had a quick look, but I'll go back and show you what I'm thinking.
Yeah.
So very similar trade. Very similar chart to dollar yen. We have had, however, more reason, in my opinion, to think that this can go short. And the yen has been so weak for the longest time. The Aussie is the question mark here to me, because I'm not sure whether the market sentiment has changed so much against the rallying Aussie dollar, because it was rallying pretty hard off the back of, I'm not 100% sure what, maybe commodity prices only, but and of course, if we draw a line through COVID and suggest, well, don't even suggest, state that the next GDP figures for the Aussie are going to be I was going to say shit house, but I should say shocking. They're not going to be good. And the point there is that's a very, very temporary scenario, because everything else is rocking, and retail sales is just going to go through the roof in the next quarter.
Oh, really? For Australia?
Well, certainly quarter on quarter, totally. Because everyone's going out of lockdown. Melbourne's out of lockdown. Sydney's out of lockdown. New South Wales and Victoria, by and large. So those numbers that you're going to see posted, where are we? Next month, end of next month, probably are going to be pretty bad, but the ones that follow that are going to be extremely good. And of course, the market understands that and realizes that it doesn't wait for the number. It's going to move now, or it should be moving now in anticipation of that. So it's really, really difficult to say Aussie bearish at the moment, but maybe there's just a little bit left in the doubts of people who are saying, okay, well, the RBA is not going to move interest rates. They've stated it. They've stated it time and time again, and they're not going to move until 2024 at the earliest, is what they continue to say. That is kind of not the thought process that's going through the other central bankers at the moment. So, and of course, the Kiwi, as we know, moved 2 weeks ago. So, yeah, it's not a fait accompli. So I've got to go to the charts, and the charts are telling me that when, and this is the crucial part, the inflection point today is going to tell me whether we're going down to here or up to here. And either is entirely possible, in my humble opinion. We have come off the top of that range, and it's only very, very early days for this range, I've got to say, and are looking for a lower high. Now, if that is now, then that sequence should be top, lower low, lower high, bottom. If it's not, then this channel probably doesn't mean too much, and we're going to here. And that's why I need today for the price to tell me exactly what's going to happen. If you go to the smaller time frames, we've got exactly that scenario that you described on dollar yen. We do have a bearish engulfing bar. I've got it right at the top of that range. We do have a lower low, we do have a lower high, and we have a second lower low. The question mark becomes, are we going to get a lower high? And that's what I'm talking about. If I see that lower high here, then I am very, very tempted to trade it, but I won't. And the reason I won't is because we've got to come back through that support level, which is very, very strong. If I see it on a daily chart, however, that's a different story because we'd be below the pivots. But on the 4-hour chart, this is really, really tough. And it's actually setting up potentially to go the opposite direction, because this could well be a clear false break of the support trade line. So if this candle were to close where it is, and then you get a bearish bar come back and retest the pivots in that confluence area, then I'm thinking long. So that's what I say. Today is crucial for Aussie yen in terms of a direction finder, I do believe. So we'll leave Aussie yen there and go to euro pound. Euro pound is probably, you know, a bee's dick away from being the trade of the week if it sets up as well. Top of the range, very, sorry?
You like this one? Lots of tension between the European zone and the European Union and the UK right now. Legal chatter and you know, potentially cancelling Article 50, sorry, potentially cancelling the trade deal, tariffs, all sorts of stuff's going on with these two right now.
Yeah. Yep.
It's an interesting, isn't it? Because at some point you'd expect the euro to base out and start to rally against the pound, but I just don't know how. I don't know what's going to be the driver for it at the minute.
Yeah, look, I last week was a bull for euro pound, but it's pretty clear to me that we've gone into range here after having come back inside this descending channel, retested it last week, which gives me the indication that this is a false break of the top of that channel, and also potentially the false break of the bottom of that range, which on the monthly chart is pretty strong. It's got a strong base here. It's got strong highs as well.
Does. Yeah.
So, you know, it's again a complex issue. What happens next? Is it going to bounce off the bottom of this range again? Or, as the daily chart is telling me, it's going to come back into the range here and go back to the bottom again. So not that easy, but
no,
the chart will always.
And where I find the euro, the euro pound really interesting with a price action, is that whole range that you just had from the monthly, you know, which we're now at the bottom of, was kind of created after Brexit had happened, you know. So that's really happened over the last 6 2-3
5
years.
years.
5 years, is it? Okay, so we got with the
Oh,
last
sorry,
5
you say after Brexit. Actually,
after Brexit. Yeah, yeah. So you
Yeah.
know, after the kind of Brexit thing ultimately happened, they're trying to find a new price discovery for the euro versus the pound, because historically, if you go back before that particular time, yeah, so scroll back a little bit.
How far do you want to go? We're back at the global financial crisis here.
Yeah, it's weird, isn't it? I mean, you know, you've sort of it's a very wide range in some respects between the and if you look at that looks like it's in the middle, because it's right, it's bang in the middle of the if you know, from the big picture. Got very, very cheap at one point, and it looks like we're somewhere now at around about. But this looks to me like around about fair value in and around here. So lower end of the range, but lower end of the range of what looked a bit toppy. But probably, you know, the upper end of the range of what looked a bit cheap. So I don't know. It's difficult to know where we go with it, with the euro pound. You know, what are people now expecting? Are they expecting the pound to really accelerate and outperform the European Union, or are they expecting Brexit to actually bite ultimately, and the UK to start really falling back? And it's a difficult one, you know, because you've got these trade deals that are going on, a couple of rug pulls. Does Brexit actually free up the UK? The claims of the UK government, does it actually free them up to go and become the you know, global leaders and be able to go and create their own trade deals? Or does it create barriers to entry because these other countries have already got trade deals with the EU, and the UK was part of that? So you know, the jury's definitely out. The city might do okay, but trading, yeah. I mean, I don't even know whether the city will do all right on this one. I don't know whether they trade it. I think it's almost better to trade, isn't it? If it's in this range, if it's sort of around this area, fantastic for you, isn't it, mate?
Ranges are great. I was going to say, yes, it's difficult, but the chart will tell me. I'm supremely confident that the chart will tell me either way here. So if it breaks to the high side and gives me a retest of that, I know what's going to happen next. I'm going to go that way. But if we stay in here and produce a significant lower high, and what I mean by that, it's got to sell off before it gives me the lower high. It can't just, I can't trade it off here unless on the 30-minute chart I go to that range, and that range will become tradable, and there I have it, or there I have one of them.
Yeah. Oh, nice.
Which is already broken to the downside. But I've also got tops and bottoms here now that I can use as well. So in exactly the same fashion, that's kind of in my ballpark. So it's the position that I love to be in, because I don't have to think. And I love it when I don't have to think, because price will tell me. It'll break and I'll get a close above here somewhere with a big bull bar, and that's cool. I can actually trade that as if it were a false break. If it comes back and retests, doesn't get back into the range, I can continue to think long. But whilst ever we're in here and we say sell off down a little bit, come back and hit the pivots, and there I get my lower high, then I know exactly what I have to do. I have to trade short. So it's in a good position for me.
Yeah, I get it. John's right though. Trading goods would not be, it's not favorable actually. It's probably going to get worse. And I think that, you know, the euro pound, it's interesting because it's, you know, when we talk about trading it, all the kind of permutations behind the scenes don't ultimately matter. But I think it's a fascinating pair really, because all of a sudden there is tension, and you know, there is disparity, there's competition, I think, which is the real key aspect, where you could almost trade the pound versus many other currencies, and it'd just be you know, a straight up this economy is performing better than this one. But this one, because they're rolled in so closely together, they might actually affect the way each other performs much more significantly than the other partnerships that go on. So a
couple more. I better update a couple of things. Pound Aussie. Now, I didn't put this in the Telegram group because I thought I'd leave you guys to micromanage this yourself, and I micromanaged it. And what I did was exactly the same as I did the week before, or day before, whenever it was, because we've been in this so often. 4 times now, I think we've been in this. I did it again. I moved my stops to entry, and guess what happened? Yep, trailing stop got hit. So again, a profit on this, but it could well have been better. And if you're still in this, as I said, I allowed you to micromanage this yourself, you'd be doing okay. You should have banked TP1 and you would still be 100 odd pips to the good. I'm not, I repeat, I'm out of the trade. But what I would suggest, if you are still in the trade and you manage it as you like, keep your stops trailing a little bit tight, because I think this is going to be all over the shop for reasons I described on the Aussie. We don't yet know, I don't yet know whether we're in a risk on or risk off scenario this week. That'll probably be underlined today, if not tomorrow. And the pound is very, very questionable in terms of its next direction, I believe.
Yeah.
So, yeah, all very interesting. Let me go to the euro. Actually, did we have
so the actual one of the Bank of England governors, I believe, said last week that the interest rate discussion is live, effectively saying we don't really know what we're going to do yet. Don't get too excited.
Yeah, exactly. I think definitely the jury is out on a lot of the central banks at the moment. They're just not sure.
No,
and I get that. That makes sense not to be sure, I believe. The euro today looks to be keen to test the monthly pivot, and I've got no reason to think that won't be the case apart from this. We've got a strong, well, recent, but it's strong-ish by the look of it, recent highs here, which could constitute a double top, could also constitute the top of the range, which we are now in, rather. And if you couple that with the dollar index, which is a bit of a proxy for the same, you can see exactly in reverse what we're seeing on euro dollar. We are at a support level, euro's at a resistance level, and this is looking very interesting. If we break under this trade line and the horizontal level, which is strong, and then retest the confluence area in this area, wow, that looks really, really bearish to me. But like I said, I think we've still got time in this range, and I'm not convinced yet until we do get a close below here and the retest that this range between 93.5 and 94.5 is not going to hold. So we'll see how that pans out. But if we do get down here and retest that level, boy, I think she's on for young and old to the short side. Really, I do. And the dollar should sell off pretty quickly if that's the case. And I'll be
which will push gold and silver both up, wouldn't it, mate? If that was that. I mean, we are watching the dollar index very, very closely. I think it could trigger a lot of things.
Yep. This buy order that I tried to place last week, I think you can cancel anyway. That I just couldn't make the trade manager talk to me. If anybody's worked that out, I'd be very, very interested to know how you do it. I've got nothing. I've absolutely got nothing. So I'm still thinking range here until proven different on the dollar index, which kind of leads me to believe, going back to euro dollar, that we're not going to break through here just yet. But if we do get below there on the dollar index, this will go, of course, it'll be the same thing, exactly the same thing. Tomorrow, you may well see that the euro, if it does break through that high, has tested the monthly pivot, and it'll be interesting to see what happens at that point. There is a bit of history in that level, of course, going back a little bit. It's around about the 117 mark, isn't it? 116.82, it's just below 117. So it'd be interesting to see what happens if this does indeed get through to that monthly pivot today. If it doesn't, and it gives us a nice little relief sell-off, I suppose, down to here, and we can even trade that if we wanted, by again going back to the top of the range. You put your rectangle in, that's pretty clear. You've got a couple of tops here, you've got a couple of bottoms there, so you've got a rectangle. If it breaks out of the rectangle with a bullish bar that closes up, let's say 1/3 of itself, maybe even better, half of itself, the candle I'm talking about, above the range, then you would be, it has to be a decisive bar. So it has to have a clean body, no tails or very few tails. You could place an order underneath that short, because if it's as strong as the candle would suggest, then there's no way it's going to come back below its low. If it's not as strong and it does come back below its low, you've got a fairly good indication that we're going back to the bottom of that range that I've just pointed out. So that's what I'll be looking for. If you get a retest at the top of that after the big breakout without coming back into or below the lows, the highs rather, then you probably got a long on your hands if that's going to be the case. But I'm, completely could go either way here, and I'll be waiting to see whichever is the case. Look, there were 10, I think, game changer bars. If you want me to run through them, I can quickly do that, but I don't see the point. It really is a case of risk on, risk off, and the reason I say that, both the Aussie, the CAD, not the Kiwi so much, which might be a little indicator, but we all know why the Kiwi is stronger at the moment. It's because of that interest rate rise, and it was backed up by good CPI figures last week, I think, as well. So you've got the Aussie, the CAD, the Euro, the Pound, all suggesting downside against the Swissy and the Yen. Every single one of those are suggesting downside on the weekly game changer bars. The Aussie Yen we've already discussed, but you can see that game changer bar. It's very similar across the board on all the Yen and Swissy pairs, bar the Kiwi, as I said, which is interesting. So maybe you could take heed in that Pound, Euro, Aussie, CAD may all be weaker than the Kiwi. Maybe that's what you have to draw out of that. Certainly going into the week, that's the case. What am I saying? I'm saying sell the rallies or buy the dips against the Kiwi, whichever way you go. Favour the Kiwi over pretty much everything at the moment, if you do get the opportunity to do that. I think that's probably the way I'd rather go with everything. But again, I say Aussie Yen and Euro Pound, probably sharing the trade of the week, but they've got to set up. And at this point in time, I'm prepared to go either way. And I know that's a little bit silly saying it's the trade of the week. But what I mean by that is, if it sets up to go long, I think you'll get a good ride. And if it sets up to go short, I think you'll get a good ride on either of those pairs. We'll see.
I think that's fair, mate. I think that I really do. I think that where we are today is that there's probably more kind of more questions than answers this week, and it might be a difficult one this week. It might be a tricky one to trade this week. It doesn't look like there's going to be. I mean, the FTSE is sleepy time, sleep film. Maybe it picks up Wednesday or something, but I'd say caution is a bit more prevalent, particularly today. So let's come back tomorrow and see if this changes a little bit.
Totally.
Yeah, the
Paul
story
L,
you're right, John.
Good day to you, bud. Sorry, I saw your message there earlier, and I didn't comment. I hope you're still in the room, and if you are, great to have you there. And thank you for saying good day. If you've got any questions at any time, you can come on screen if you want and ask them. Show us your charts, whatever you want to do. We're here to be your trading buddies, and that's why we're here, because we've got some wonderful trading buddies that come into our room. Euro Aussie for Ram. Okay, let's have a look at Euro Aussie. I did have Euro Aussie up here at some stage, but I've got rid of it. I'll look at it. Euro Aussie. Okay. All right, I'm just getting a feel for it because I haven't really had a look at it this week. Okay, here's what I see on the big picture. That line there should do. No, I'll go with this one. Yeah, confusing. And here's why. It's confusing for me, because it's suggesting that we've come off the bottom of the, and I know this is a big gap between touches, 3 years, in fact, since we've been down to this level, apart from there. And I'm just not yet convinced that we're not going to go back to the top of that range. So bigger picture's got me questioning. I don't know really the direction that we're going to take. Weekly chart is suggesting to me that we have broken and are headed short. But how far? That's the question.
Yeah, it looks like a sell, but not at the price, doesn't it?
Yeah, you got to come back here somewhere. The daily is telling me that's pretty strong, that chart, actually. Very, very strong. Interesting that it's not bouncing off anything that you would expect it to bounce off. And I'm looking at the weekly pivot. No test, no test, no, well, kind of the weekly pivot came to the market rather than the reverse. So that's interesting. And now the weekly pivot is getting exactly the same as we saw here, a test today. I'm going to have to rely on the bigger picture, which is, to me, bearish, but where do we draw our line to say, okay, let's get in? I suppose we have to use the trend line. And the trend line that's biggest is telling me that we've broken to the high side. Yeah, I'm not convinced here there's anything going on at this point. Big bullish engulfing bar. Weekly chart is kind of a game changer bar. It's not, because it's a spinning top, but if it didn't have a tail, I'd be calling this long. I really would. 1, 2, 3, 4 weeks of selling with a big reversal bar. Well, it's not really a reversal bar, but it doesn't like that level. I'm going to say I'm non-committal at this point, but I do note that we have broken this trend line, which is the downtrend line, and I would be looking for price to react off that at some stage. So it's a wait for me. If I see price get back below the trend line, I'd have to be a bear. But at this point in time, I'm non-committal. I'd be waiting for that test. The trend, the pivots and current trend is bullish, higher high, higher low, higher high. Higher low here gets me interested, but I can't jump in because I've got to contend with the weekly pivot. I'll be going that way. I'd be saying wait until you get the retest of this trend line on a daily chart. But if you saw on the 4-hour chart, price get to here, I'd be looking for a bounce. Hard to trade for me. But what I would also be looking for is price to get back to that line, then tell me what's going to happen next. So if we got back below it, I'd be thinking short. If we didn't get back below it, I'd be thinking long. And I'd be looking to trade that as a consolidate at this level, back above, take out the pivots, retest it, then I can go long. That's about where I'm at. You'd get a channel formed at that point as well. So that might make a difference. If you're going to trade it on a smaller time frame than 4 hours, I wish you luck, because it's not that clear to me which way it's going. What do you think, Ash?
I think the same, mate. Yeah, it's one of those. I just looked at the big picture and I looked at the weekly, and it straight away it looks like a short, but just in the wrong place. I mean, if you try and take the bounce here, it's going to be a counter trend trade, and you're going to have to take profit relatively quickly. Mm-hmm. If you want to try and catch the trend, then it's better to wait for the bounce. You see, my trend line would probably be a bit higher than yours, and I'd probably go through that that train tracks reversal as the high.
Okay, trend line on the 4-hour chart, I'd probably have there.
Yeah, me too. Yeah, that's what I'll be looking at.
And that looks bearish. That looks really
Yeah.
bearish.
Yeah.
So yeah, I like that too. The problem you've
Yeah.
got here, as you've said, basically, is trading, and depends on where this candle closes, I suppose. I wouldn't be wanting to trade right now at that level, but I would get interested if we then got, say, that close where it is, and we got a bullish bar back to here. That makes perfect sense to me. Then I could trade underneath the bullish bar and put my stop loss up here. That would work. I'd be okay with that. But I've got to take profit before that level, because that's where you're going to get into trouble, round about there. So that's Euro Aussie. Wasn't there something else in there I saw? Oh, Aussie Kiwi from Paul L. Isn't the Aussie Kiwi in a head and shoulders pattern? Well, let's take a look. On what chart are you looking, Paul? Well, look at that. Straight down to there. You're looking at the daily, perhaps, right? Where you've got a little left shoulder here, big head, and then a right shoulder, if that's what you're looking at. Impossible for me to go short on the back of that right now, but that all changes if we take out the monthly pivot, which would then be your neckline as well. So if you take that out, come back and retest it, then you've got to trade, in my humble opinion, to play the head and shoulders, which to me is a little bit out of context. But look at that chart. That's tough. What caused that? Got no idea. And then it just got immediately obliterated. Immediately obliterated. Don't know what that was all about on Friday. In fact, that was really late. That's late US session. Got no idea what happened there.
Is it the Aussie Kiwi?
Yeah. Absolutely no idea.
Oh, I tell you what. Yeah, there was lots of chatter sort of from Janet Yellen and then Jerome Powell on Friday. So I think it moved all the market.
Okay, so it's a general move up and down. Yeah, nice if you got that and got out here, but yeah. So I'm bearish on this chart, but only to a point, because overall I've got a bullish outlook on this one, which is very, very hard. And my analysis last week was, and if I was a limit entry order trader, I would probably be in this trade long at the moment, because my consideration was that we'd come off this level here. Again, you can, put a range in here. It looks fairly obvious. Where do you want to start? It's been in a range forever, basically. You can go there, you can go there, you can go there. But everything to me is pointing towards we've come off the bottom. And that's why I was looking for a higher low off the monthly pivot to go long. Come off this trend line as well. I think we'll have another crack at that at some stage. So I'm a little bit bullish this pair. But the chart at the moment is really, really difficult to trade unless you, as you say, like the head and shoulders and are waiting for a break and retest of the neckline, which makes sense, perfect sense. Chart's telling me that's the case, but the chart's also telling me that if we don't come below that, then we're in for another ride up to here and maybe to here, certainly to test that high, and that's what I'm waiting for at the moment. Got any thoughts, Ash?
What's this on? This is the Aussie dollar.
Aussie Kiwi.
Aussie Kiwi. Yeah, I mean, I'm with you on that. I think I'm with you on the fact that it's bullish. I don't particularly like the Kiwi when it comes down to just the numbers. I think that they've moved, and I've got a feeling they might have moved a bit early. Now, that may well be what's going to end up moving the Kiwi. When we start to kind of like drive forward, do they end up choking? Because the thing is, while they've moved and nobody else has, it makes their currency, it makes their goods and services more expensive. So does that end up kind of choking their recovery a little bit sort of as we start to move forward. Market doesn't seem to love it, does it? I mean, you'd think with an interest rate rise, the Kiwi should be flying. And it's done okay over the last few days, or a small period, but ultimately it hasn't really kind of lit the torch paper just yet. So I'm with you. Aussie Kiwi for me is a long, and almost everything against the Kiwi is a bit of a long for me. I've got to say.
Interesting, because if you go on what the relative strength indicators are telling me, then you've still got to favour the Kiwi.
Yeah. Well, it might be that this is a bit of a tangled web that takes a little while to unfold.
I think we're saying everything we're saying is coming to the same point. It's going to be a tough week to get
for sure.
General direction.
I think it will. I think be very, very careful this week. That's the underlying messaging.
Yeah, the more we speak, the more we're saying exactly the same thing.
Yeah,
interesting. But yeah, like so many others, and everything I'm looking at, Paul, it's telling me that we're at inflection points, and just wait until that inflection point is described by price. In other words, as you're saying, if this is a head and shoulders and we get below the neckline and retest it, that's bearish. But whilst ever we're above here and looking for what I'm looking for on the bigger picture, a higher low based on the bounce off the bottom of that range. And I was always looking for it here at the monthly pivot. Don't quite see what I want to see. It's close, but I don't quite see what I want to see. So it's wait again on that one. Don't know what chart's going to show it to me yet, but whichever one does, then away we shall go. But not yet. And I think it's a not yet day.
Yeah, agreed.
It's a classic Western film. Yes. Speaking of Western films, my goodness, what a terrible thing that was.
What's that?
Bang bang! I shot you. What's his name? Baldwin, Alec Baldwin.
Oh gosh, yeah, that was bad. I mean, I haven't really read much of the fallout on that, but I don't really, fully know the story. I only know the headline, but I mean, he's got I don't know. How would you continue in your career after that?
Wouldn't be good, that's for sure. And I think he has stopped everything at the moment.
Right. Yeah. It's going to be tough to get through.
Very tough. Speaking of getting through, I think we are through.
Yeah.
Are we not?
Cool, man. Okay.
Happy days.
Thanks as always. And we'll be back tomorrow for our last Tuesday.
Last Tuesday.
George will be in with you. I'll be back on Wednesday briefly, and then we will wrap it up for the quiz on Thursday, and then we'll be back with our new format next week. But thanks to the guys in the room. Looks like a pretty good group today. You are welcome, Ram. We will see you. We'll see you tomorrow, same trade time, same trade channel. Thanks to you, Jeff. Thank you to Angel, and I'll see you in a couple of days. But Jeff will be back bright and early tomorrow.
Yeah, you'll see me on Wednesday for a brief section as well. Awesome. So in the meantime, just take a little bit easy on those directional biases. They're a little bit tricky at the moment. They will reveal themselves, and that's what we need to wait for, I think, at the moment. Have a good one.